Hello everyone, it's me, Mystic Hog, and today I've decided to apply my crystal ball, to read my tea leaves, and pretty much to put my apparently red painted finger in the air and predict what's going to be happening in 2023. Let's do it. Alright, so in terms of my predictions, I've decided to have three different categories. So we're going to start with stocks performance, then geopolitics, and then specific holdings. I've got 10 overall in the hope that I might get at least one right and therefore get one over on most of the playing footsie guys. So let's see. To start with, I think the FTSE 350 will end the year minus 2%. To be honest, I expect most of this to get carried by the FTSE 100, but because of the fact I use the FTSE 350 as one of my benchmarks, it seems better to talk about that. Certainly the majority of the market cap here is in the top 100. Really, it's kind of more of the same from 2022. I expect the defensive, high-yielding, commodity-based, insurance-based FTSE 100 to do very well. I also expect it to benefit from FX movements to some degree, and therefore I think that despite the fact it will be another challenging year, the FTSE 350 will finish more or less flat. Next up, we've got the S&P. I'm still not of a bullish opinion on the S&P. I think the fact it's so top heavy with tech, I expect tech to continue to suffer for various reasons. I personally think that tech is a bit beaten up at the moment, so I've been using it as an opportunity to buy. However, it does feel a little bit like catching a falling knife, so we'll see how that goes. But yeah, I don't think it'll be quite as bad as it has been this year. I think a lot of the bad news is already factored in, and I expect it to kind of be treading water for a large proportion of the S&P 500. But I think certain sectors, including tech, will continue to get beaten up, and because of the tech dominant nature of the S&P, I expect it to be down about 12%. Next up, I think I'm going to outperform both. Now, this is probably just a bit optimistic. I have been outperforming the S&P for a while now. I overtook them in 2021, and then I did fall below it in 2022 with the Ukraine-Russia invasion, just because I had material exposure to a couple of Russian miners. However, since then, I've basically pulled it back. I do have a relatively tech-heavy weighting in technology myself, but a lot of it's in smaller companies. So my main one is Amcor, and that's about 15% of my portfolio. And again, I think that that is going to outperform the wider tech sector. I do have some exposure to big tech, but only about 6% of my portfolio. So, you know, that's less than half the size of Amcor by itself. Likewise as well, some of my other tech is a little bit more exciting and or didn't have the same kind of multiple going into the crash. And I'd big Amcor for that. I think it currently trades on a 7 multiple, and that was after a pretty significant run up following earnings. I also expect to benefit somewhat by FX movements, maybe to the tune of between 5 and 10%. I think that will kind of help me bridge the gap, because although I roughly split my portfolio 50-50 between FTSE and S&P, a lot of my FTSE holdings are in growth companies, and I have a lot more weighting in the FTSE 250. The main call out there would be Games Workshop. And again, that's also about 15% of my portfolio. So, but I have a lot of other FTSE 250 and indeed FTSE AIM companies within that as well. So I think the other one that I'd really call out would be Gamma Communications. That's a very big holding for me as well. Again, another 15%. That's my big three basically. So I think the FTSE 100 will do well, and certain companies within the FTSE 250 will do well. And we'll just wait and see. But I think overall I can scrape a 0% this year. Next up then, in terms of geopolitics, I do not believe that there will be peace between Russia and Ukraine. I think there's too much bad blood basically between the two of them at the moment to come to any kind of pragmatic, if that's the right word, but any kind of agreement. And basically I don't expect either side to be exhausted enough to seek peace. So I think it will continue. I think basically we need another winter to decide who can stick it out for longest and who will seek that, or alternatively further progress by one of the armies, which currently would be Ukraine, of course. We will see, but unless there is some kind of like political change in either country, or you know, a significant change on the battlefield, I don't realistically expect the situation to change enough to force peace basically. I believe that there'll be a revised agreement between the UK and the EU over the Northern Ireland Protocol. I think at the moment, sort of a few factors are coming together to make that a realistic possibility. I think the EU and the UK have worked relatively well over things like Ukraine. Um, there is some much better feelings between both camps following the removal of certain key figures that were particularly prominent before, and it feels like there's an acceptance across all parties that maybe they could have handled things better 7 years ago, which I always think is an important start to any kind of renewed relationship, shall we say. So most recently, that was borne out by the Irish Taoiseach Prime Minister, sort of saying things along those lines as well. So I expect that there's going to be some movement on it too. It'll probably be more of a fudge, honestly, but I think it will be an important feel-good moment, especially for UK stocks. I do expect some of the again, FTSE 100, this is going to be another win for it, basically. Less so the FTSE 250, although I do suspect some of the larger companies with the more export focused will benefit. Games Workshop would be a good one. Gamma has some stuff in there as well, as it's part of European expansion. So I do think that there will be some winners from this, basically. And I do think overall it will be helpful to long-term UK specifically, but actually to certain countries within the EU as well. I mean, I would take Germany as suffering quite badly at the moment, despite having left the European Union. So yeah, I'm expecting to see some positive movements on that contentious issue. I think there will be at least one additional COVID variant discovered. I think it's almost inevitable, right? Like China's more or less been a mixing pot for over a year. And I know they've had lockdowns and stuff, but it's a virus. You can't lock it down. I read a cool stat a few years ago that says that we're 8% virus, which is about 4 times as much as we are Neanderthal. So we are significantly more virus than we are our ancestors, which kind of just is amazing. And these things eventually will get an immunity in the same way that, the Black Death, if it was around today, it wouldn't really harm most of the people in Europe because, our ancestors survived and therefore we have that immunity in place. So I think that there will be at least one variant. I think it's almost inevitable. So this feels like one of my safer predictions. However, I'm going to predict that it won't be particularly problematic in the long run. So I think there'll be a short-term panic. People will fear the worst. But I think that a combination of sort of already existing vaccines, a thorough understanding, monitoring in place, etc., will basically mean that it's limited, unless, of course, the mutation is particularly aggressive in some way. But a lot of the sort of COVID strains, they tend to be one end of the spectrum. So they're either particularly virulent but not deadly, or deadly but not especially virulent. It's quite rare to get both. Or a perfect balance between the two where it becomes really dangerous. So I think there'll be a really big panic actually, and there might be some bargains to get picked up. So I'll be keeping an eye out for that. But I also think things will recover relatively quickly. All right, now onto specific holdings. I'm going to start with Games Workshop. So this has already had a bit of a run up. I think it will finish the year above £100. Most of the reason for the run up is because they have this agreement in principle with Amazon. But I think that core earnings, although I expect them to be more or less flat year on year, or actually slightly down year on year, because it will cover a period where freight and logistics costs were quite expensive. I think that you'll see an update in their half year 2023 that will really kind of reaffirm that their core business is back. That's my prediction, so I might have to wait a little while for this to come true. The other possibility here is that the agreement in principle with Amazon is particularly good. It's seen positively in some way. And Amazon at the moment kind of has a period, I think it's 5 months still, where they can sort of talk to script writers, to law experts, basically, get specifics and get the understanding before deciding to proceed. So I more or less expect Games Workshop to tread water for the next few months, but then I think one and or both of those situations will happen. And we will go from there, basically. So that's my prediction for Games Workshop. By the way, I still maintain my fair value here of £120, so I'm going to stand by that. And I don't think it will change, basically. I believe Amcor will outperform the wider semiconductor market. So I'm not sure how contentious this one is, because it does have very real exposure to it, but it's much less cyclical than many of its peers, and I think that will kind of come good. I would point out here that I've got history on my side. It has outperformed the semi space for the last 1 and 5 years. I do expect that to continue. I'm not entirely sure what it will look like, but to me, I still don't believe the share price is up to date with events. However, I can also kind of understand it because it had like a blowout last quarter where the share price went up like 50%. Since then, it's dropped back a little bit. But to me, I was starting to think like when it was up like 50% and then like 28, it was maybe like there were better bargains out there in the stock market, right? Like I've got a mid 30 for this company, you know, and I think there are at least as good a bargain as everywhere else. But you know, they've guided quite pessimistically on future earnings, so I can kind of also understand why there's been some pullback, and we'll see what direction that goes. But I am confident that it'll outperform its peers. Basically, it's less cyclical. It's exposed to areas that I think will get less beaten up than again competitors and peers, and therefore I think will outperform the wider semi space. All right, this one's one of my more ambitious ones. So Fevertree will receive a takeover proposal, but I'm going to double down here that it won't be accepted. I think Fevertree has struggled, it's clear, for several years. The strategy is right, but the operational execution hasn't been. They've also been impacted by freight and logistics, and you've almost seen like this nightmare scenario where it was previously being praised for being a very capital-light business that basically, you know, outsourced a lot of its production. But that's kind of come back to bite it because effectively it's found itself in a very weak position dealing with like bottling plants, cost increases, freight. You know, and just at the moment where it was expanding, it's kind of been hit with many costs that have really crushed margins. Still profitable, etc. It's still growing. It's got all the foundations there. They call it the premiumization of the drinks market. I'm a big fan of this. I think that's exactly what we're seeing. Love the product. Love the brand. I think it's got a lot of the foundations to be successful. But yeah, operationally, it's not performed in the way that I would like. They did recently get a non-exec chair in, so and again, I was really pleased with that appointment, as I mentioned, ex-SAB Miller CFO. So exactly the kind of person that I would want to be reviewing costs and keeping a tight rein on things. So I'm predicting a takeover in the kind of mid-teens, that offer. And I think Fevertree will sort of say it's opportunistic, undervalues the business, we're worth a lot more, and etc. So that's this one's quite an ambitious one, I think, but I can see the kind of opportunity there if, you know, Fevertree does start to show some improvement. It's definitely stabilized and recovered a little bit after a really big drop, and I think actually some of the analysts' guidance on this is particularly wrong. You know, I've seen like £7 700p price targets. I just think they're way off. I can totally understand why you've taken a red marker to it. Like I did exactly the same. I think I'm in the 1400s at the moment. Share price is about 11. So, you know, it has stabilized a little bit, having dropped as low as about 8. But yeah, I think it's, you know, if it puts out 1 or 2 quarters of good numbers, I think it will receive attention. It's already got strategic relationships with several of the big drinks companies, and I can see this. I mean, this would be easily digestible from any of the big drinks groups effectively. Likewise as well, several luxury brands, the likes of like Louis Vuitton, could very easily put it into its Moet and Hennessy offering. Then you've got the likes of SAB, Diageo, Pernod, etc. So I think there's a few candidates here that could be interested, as well as PE, of course, as always. And lastly, again, this might be a bit ambitious to sort of pick a defensive insurance company and assume it's going to go up 15% in a year. However, I think there's going to be 2 driving, maybe even 3 driving factors behind Phoenix. Firstly, I think the market is moving in a direction. So specifically the UK life assurance and pension markets are moving in a way which is very complementary to Phoenix's direction. Particularly the pension dashboard that has to be in place by August as part of the 2021, I think, Pensions Reform Act. I think Phoenix are just so perfectly placed. They go under the radar compared to the likes of Legal & General, maybe to some degree of Aviva as well. But again, this is a real FTSE 100 stalwart now. So I think first of all, the kind of market, including the regulatory environment, is going to favour them. Secondly, as well, I see some like distressed insurers and other opportunities that Phoenix may well be in a position to capitalize on. So, you know, it took a private funding in an open data technology company quite recently. Before then, it picked up a Canadian business, as well as sort of extending its commercial relationship with them as well. And I just kind of see it picking up a lot of there's a lot of opportunities, I think, for an extremely well capitalized business to grow. Failing that, again, they have so much cash available to them that they could do a special. That's clearly what analysts were thinking about, or maybe a buyback as well would not be a huge surprise to me, which I think would really put a rocket under these shares. The company themselves have said that, you know, their focus at the moment is on both organic and inorganic growth. So, you know, I think they've just got a lot of room to grow, basically. I don't think it's expensive. It yields massively, and I expect the dividend to increase by at least 5% next year, just from sort of some of their acquisitions. And so right now, I think it's about £6.20. So I would say this is a relatively ambitious one, but I can see it being the case. I would say as well that this business has got one of the widest analyst ranges I've seen. For me, I think the business is somewhat misunderstood. I think it, to use its own terminology, has proven the wedge, where it's gone from a fairly low margin life assurance business, closed book funds, that kind of stuff. And to be clear, it's now got to the scale where it's actually able to make reasonable margins on those things and basically, you know, run them down. And what it's done is, I think that the acquisition of Standard Life is just so smart, you know, and I expect them to basically use that brand to grow further. And therefore, I think it's pensions, both at a kind of a simple customer level, shall we say, like, you know, what's available to you and me. I also think that they'll continue to look at opportunities in the more premium area, private advice, that kind of stuff as well. Again, I can see a lot of opportunity there as people start to look at their investment pots and those kind of things. Potentially they might be able to pick up some business as well. So I think there are some, basically think with Phoenix, you've got a situation here where you've got a good regulatory and macroeconomic environment. You've got a really well capitalized business that's able to take advantage of opportunities, and you've got a business which has proven itself basically. And I think the more exciting part of its business isn't quite baked in yet in terms of its forward guidance and multiple that it should be trading at. So yeah, I think there's a lot of ways that this could happen, and it may be a combination of a few of them. So yeah, so I'm going to back my main insurer of choice. I've got about £6,000 in this company. I think I've got 1,000 shares. So definitely on the medium to large size in terms of my portfolio. So again, it's my insurer of choice, although I do have a smaller position in Legal in General. And we will see how that goes toward the end. So that's my crystal ball reading. We will review these in a year's time, probably have a laugh about how wrong I was, because you know, it's a pretty much a mug's game. I do expect to be at least no worse than just about every investment bank who got 2022 horrifically wrong, and we will just see from there. So anyway, let me know your predictions, whether you agree with any of these, whether you disagree. I'm genuinely be interested to know. And likewise, you know, we can keep those comments there, and in a year's time, we can see how wrong or right we all were. Thanks very much, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.